open your credit card statement and the number doesn't match your system, and specifically the credit card payable is the number that I'm referring to. You recognize some transactions in your statement, others feel off. There's interest, maybe a fee, and now you're asking, what exactly am I supposed to reconcile here? A credit card is not just one number. It's three things happening at once. One, transactions. Two, interest and fees. And three, timing differences. And reconciliation means making sure all three are correctly reflected in your system. When you reconcile a credit card, you are comparing your system, what you've recorded, to the statement, what actually happened. But here's the key. The statement is not just cash, it's a summary of activity over time. So you start with transactions. Every purchase on the statement should already exist in your system. If it doesn't, you missed it. For example, groceries, $120 would have been charged to credit card payable. Gas, $60. If you put that on the credit card, you would have debited your gas expense and credited credit card payable. Same thing for subscriptions. If you have your subscriptions going through your credit card, you would record the cash payment for the subscription, which, as we know now, the debit would be to the subscription account, so the prepaid subscription, and the credit would be to increase the value of the credit card payable. If something appears on the statement but not in your system, you record it. So for example, you would debit whatever the expense account is if it was something that was not a prepaid or accrual, and then you would credit the credit card payable. And this would have the effect of increasing the balance on the credit card payable. Now look at interest and fees. These are almost always missing from your system because you don't see them until the statement arrives. So for example, you may have interest of $18, you may have late fees of $25. In this case, you would need to update your journal. Your journal entries would be to debit the interest expense account for the 18, debit the fees expense account for 25, and credit the credit card payable for 43. Now, interest expense will have portions that are attributed to the current period and portions that are attributed to past periods, and that's because of the timing differences between when the billing period is and when the reporting period is. So you have to be careful of that interest expense. It may be a combination of accrued interest, and it might be a combination of interest expense. Now, the subtle part is timing. Some transactions are in your system, but not yet on the statement. These are pending or cutoff differences, and they are not errors. So for example, it may be close to or at month end, and let's say it's June the 30th, that credit card could be used out and about and you are making payments, but those pending payments are not yet showing. You would know that they exist and you may have put them in your system, but they're not showing yet on your credit card, and so the account balance is going to be different between your records and the credit card records. Now, bring it all together. Any difference between your system and the statement will come from one of three places: missing transactions, interest or fees, and timing differences. Just like bank reconciliation, every difference must be explained. Now, the payment. When you pay your credit card, your cash obviously goes down and the liability goes down. The journal entry for payment is to simply debit your credit card payable and credit cash. So here's the full process. 1, compare your system to the statement. 2, identify missing transactions. 3, record interest and fees. 4, recognize timing differences. 5, confirm balances match. And 6, record payment when it occurs. So this is the key idea. A credit card is a rolling accumulation of activity, not a single transaction. And reconciliation is how you turn that activity into something that's accurate. So now you've reconciled cash, accruals, credit cards. Next, we move to loan reconciliation. This is where scheduled payments exist, there's interest calculations, and there's balances, and they must all align with reality. Transactions, interest, timing. Explain all three, and your system will always match reality.